Investors are hungry for Tesla's first bond offering. The yield 5.3%, a record low coupon if compared to other companies that have a junk rating like Hertz and Endo International. Well, joining us now is Nabila Ahmed, Bloomberg's corporate finance senior reporter, and from Boston, Kathleen Gaffney, Eaton Vance, co-director of diversified fixed income. Nabila, we talked about this all last week. What's it going to price at? What's it going to price at? 5.3%. Surprise?
No, I mean, they were so oversubscribed. They could have probably brought that in a little bit, but apparently Elon Musk said that he wanted to reward the bondholders for getting it done, so he just ticked it up slightly.
I'm not sure. We'll see. Time will tell if it's a reward.
I won't ask you if you think the bondholders are being rewarded here. Well, we'll ask, though, as to why the attractiveness of a company as an equity proposition is being reflected in the bond market. I don't get it. Many other people don't get it either. Do you get it?
I get it. It's that reach for yield. What seems like a safe investment isn't always safe. It's a good yield today, but dial it forward a year or two, and investors may not be so happy.
Nabila, I guess something we've got to talk about is why they price this low and why investors keep buying. Do you have to think about total return and not just the yield, the coupon that you're going to get, but the total return? And that's why investors have kept going in, because they've been winning. Despite the amount of conversations we have around this table that yields are too low, yields are too low, they keep going low, and the total return has been pretty good.
Yeah, and the other thing is they have so much money to put to work. So, you know, they've got investors saying, I understand this company. Tesla is a big name. It's a brand name. Why aren't you buying that? You know, we've seen record inflows into all of these funds, and Kathleen can talk to us about that as well. You've got to put your money somewhere.
Kathleen, putting your money somewhere is one thing. You talked about getting burnt at some point. Where they will sit on the capital structure of a company like Tesla at some point has to matter. This is unsecured debt. Tesla could well come out with secured debt at some point down the road. When are these kind of things going to matter?
Well, you've got an 8-year maturity, so you do have time, and a lot of investors are working with that runway. But if you look at the maturity wall, you've got a fair amount of convertible debt that is coming due next year and 2019, 2020. That's what I would be concerned about.